The biggest commercial real estate myth out there: you need millions to invest. And one of the biggest misconceptions about commercial real estate investing is that you need millions of dollars sitting in your bank before you can buy your first property. And the truth is that many successful commercial real estate investors started with far less capital than most people could even imagine. And today's market offers numerous ways to participate in commercial real estate through partnerships, through syndications, through owner user financing, but also creative lending solutions that dramatically can reduce the amount of cash needed up front to invest in a commercial property. So, if you've been waiting until you can become wealthy enough to invest, the article or this article and blog post may completely change your perspective, is the point. So, the myth is that commercial real estate is only for millionaires. And it's easy to assume that every shopping center or office building or warehouse is owned by some billionaire out there. Well, in reality, many commercial properties are owned by average folks: small business owners, doctors and dentists, contractors, local investors, families, investment groups, retirement accounts, partnerships. And commercial real estate has become increasingly accessible thanks to more flexible financing and collaborative ownership structures. So, opportunity number one to think about: partnerships. One of the oldest and smartest ways to invest is through partnerships. So, instead of one investor bringing all the money to the table, partners can combine and join forces and pool their capital and pool their experience and pool their credit reports and use property management skills or industry expertise. And then maybe somebody else is just doing the deal sourcing. So, for example, one partner would find the property, and another partner would be the one who brings capital. You can call them money bags for short. And then another one that manages the reservations and the tenants. And everyone shares in the profits, and there's less work for one individual person. And great commercial deals are often built around complementary strengths and not individual personal wealth. So, opportunity number two: real estate syndications. And syndications allow multiple investors to pool funds into larger commercial properties. And instead of buying a $5 million apartment complex yourself, you may want to invest, say, 25,000, 50,000, 100,000. While you still receive ownership benefits and passive income, you just own a smaller share of the bigger pie. And some benefits there include professional management, you diversifying your investments. There's passive cash flow, but also you would gain access to larger institutional quality assets with reduced day-to-day responsibilities. And for investors who don't want to actively manage property, syndications can be an excellent entry point. Opportunity number three: owner user commercial properties. And many business owners don't realize they can own they own the building that their company would run their business from. So instead of paying rent to Joe Bob landlord, you can be paying yourself rent and build equity every month. And for some examples include medical office and dental practices and law offices and HVAC companies and plumbing businesses and accounting firms and retail stores and warehouses. And programs such as SBA 504 loans can allow owner users to purchase commercial property with significantly lower down payments than many investors expect. And if you're a medical or dental professional, we can get you 100% financing. Keep that one in the back of your mind. Owning your building can become one of the strongest long-term wealth building strategies for a growing business. And the point is that financing can actually change everything. And many investors focus exclusively on finding the perfect property at the perfect price, whereas experienced investors often do the opposite. They'll look at their financing first and understand how they can play with the knobs to get what they're looking and structure the deal properly. And understanding your financing options can help determine your buying power, what your down payment requirements would be, what the monthly payments would look like, what's your cash flow, what's your return on investment, but also your long-term flexibility to exit. And the right loan structure can make an otherwise unattainable property financially feasible. And commercial real estate isn't reserved for the ultra wealthy. And today's market provides opportunities through partnerships, syndications, SBA financing, conventional commercial loans, owner user financing, private capital, PE groups, or joint ventures. And the biggest obstacle for many aspiring investors isn't the money itself. It's simply the belief that they can't get started. So if you change that, you might open some doors. And the sooner you understand your actual financing options, the sooner you can begin building equity, passive income, and long-term wealth. So, final thoughts for the day is that commercial real estate remains one of the most effective wealth building tools available. You don't necessarily need millions to start. You need the right strategy. So, whether you're an investor who's looking to acquire your first commercial property, or a business owner who's ready to stop leasing and start building equity, understanding your financing options is the first step. Now, the opportunity may be closer than you think. And if you're ready to explore your options, let's discuss your investment goals and identify financing solutions that could fit your situation. And that is it for the day, folks. Thank you for watching. Please visit my website, houstonrealestatebrokerage.com. You can schedule a consultation so that we can have a conversation and get to know each other a little better and see what we can do to help. Thanks for watching. Take care.